Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates, and I'm sorry, we're late today. We're after 6 p.m. Central Daylight Time for this agriculture update for October 11th, 2018. Well, the big news of the day, away from the stock market where we had another hard break in the market and the other economic news, the economic news concerning the grain stocks. And after they came out, the algorithm traders were hitting it all over. I watched the wheat market go from 427 back to 410.5 in, honestly, 5-10 minutes. It was pretty crazy trading that was going on. But the report, as I see it, was friendly, basically corn. I viewed it as friendly beans, a little bit bearish on the wheat market. But the question is, can you get down under the current lows we've had, or have we seen lows in this market, and I'm going to call them the harvest lows? I'm inclined to think that. As we take a look at the weekly area chart of closes, what do you see on the chart? And by the way, what did you see on these quote boards behind me? We're now in better high definition. We've upgraded all our computers. If I look a bit washed out, we're going to make adjustments to that tomorrow for the colors. But as you can see, we've rallied to the 18-day average of closes. I call it the 18-week. Did I say day? 18-week moving average of closes, because this is a weekly area chart of closes, and that's your resistance point. As we look at a daily bar chart, you can see this. Not sideways. You've had an uptrend in action. You recently made a lower low, and now the market came back today, closing up 6 cents after the report came out. Are we trending? No. You've got a pattern of a higher high and a lower low. If you take a look at the moving averages, the 18-day moving average of closes, because this is a daily chart, and the 100-day, you're caught between the two. But the market now has been respecting this all the way through actually the end of September, so it's about a couple of weeks now that the market's been respecting this number. I'm going to view that as important, but more important to me is this 810.5, 811 area where the market is held twice on a test of that. If this market can start up here, where might it go? Well, the first number of resistance is the upper Bollinger Band, this black line at 879 and a fraction. So between here and there is where I'm looking for the resistance. In terms of momentum, the market has been correcting the momentum. You'll notice that both these numbers, where are they? One is under 59, but the other's still over 70. So the market still has to work out its overbought condition, which it has not done. I'd label this chart as pretty neutral. As we come to the meal chart, you can see that momentum has been gradually drifting down. On the close, the market was no longer overbought. The trend of the market is up with higher lows, higher highs. You're stuck in the narrow black bands, the Bollinger Bands, if you will. Because we had an outside day up today, a trap would be sprung if the market took out today's lows on either Friday or Monday. That's how I'd view that, and then I'd look for a minimum of the 18-day average of closes. Let's assume that's not taken out. Upside target starts in at 320.90. That's the upper Bollinger Band. In the slow stochastic study on our soybean oil, that has been pointing down recently. Both numbers are what? Mixed. You have one over 71. You have the other number under 57. You're still overbought. The market fell when you lost the embedded reading right through here, and the target was the 18-day average of closes, which now the market's getting its footing at. The question, of course, in this market is if meal is going up, and that's generally how uptrends develop in the soy complex, meal becomes stronger than oil. That's what you're getting at this point in time. As we come to the corn market, Let me come right there. I got to get used to these charts as they look a little different to me because they're high definition. The market has come down to the 18-day average today, had a big reversal day to the upside. If you look at the range, it was 373 to 360 for corn. That's a pretty big range, and you see that on the chart. I'm going to look for formidable resistance to hit the market between 374, 376. We were talking in the office, and we think that these lows back here are not going to be taken out again in the 340s, that the harvest lows are in place. That doesn't mean you have to go higher, but we don't think that low's in jeopardy at this point off the fundamentals that we see in the export demand we're getting. As you look at the wheat, you can see you're still in the lower highs, lower lows. Now, the low today, 506.5. Do you see that? The Bollinger Band's coming in right against that 505 area. I wouldn't be surprised if the market gets down there tomorrow, finds some support. You're already in oversold territory. In the sugar market, we have a pattern of higher lows, certainly higher highs. You're stalling here, but you have an embedded reading. An embedded reading occurs when the slow stochastics have at least 3 days in a row where both numbers are over 80. So you had it on Thursday, you have it on Wednesday, you had it on Monday, you did not have it on Friday. So this is Monday. I said that wrong. That's Monday. You didn't have it. You got it on Tuesday. My days are rough stock market day today. Tuesday, Wednesday, Thursday. Embedded reading. Until the red line closes under 80, I will look for this market to be very strongly bought. When it loses that, then I look for prices to make a run to the closest of the key averages, which would be the 100-day average. In the coffee market, the battleground is the combination of the Bollinger Band 100-day average, and now for 4 days in a row you've been stuck there. What the market does have is the embedded reading that is bullish. So the pullbacks in this market keep getting bought, and I think they'll stay that way until the red line closes back under 80. In the cocoa market, you have worked out of an oversold condition, battleground 3 days in a row, the 18-day average of closes. If the market gets up and over 21.32, you could continue the gyrations up. If the market fails here and starts down, I'd be looking in this $20 area to see if support comes in there. The cotton market, we heard that in the Carolinas and the like, Georgia, that they're talking a lot of cotton damage, yet it didn't have much of an impact on the market. You were up one tick on the day. The momentum of the market is working out of, not quite out of it yet, working out of being oversold. Any reading under 30 is oversold the way that I teach my charting. The pattern of the market is higher lows, higher highs. It's an outside day up. You should not take out today's lows if you're going to avoid having what we call a bullish trap. If you do on Friday or Monday, I wouldn't be surprised that you get to the lower Bollinger Band. To get bullishness going in the market, you need to close over that 18-day average of closes. In the cattle market, we've got a pattern of lower highs, lower lows. You hit the lower Bollinger Band, and for the past 3 days, you've been riding it to the downside in an oversold condition. You've got to work out the oversold condition in one of two ways. You either embed and lock in a bear trend, or the market sooner or later starts getting a bid back into it, and as the rally develops, it works it out that way. Feeder cattle, finding its support against the lower Bollinger Band. Momentum still down. You're not oversold. Trend still down. I think there'd be willing sellers here in the 157s as the market tries to rally. In the hog market, the market has come down today for the first challenge of the lower Bollinger Band since quite a ways back. In fact, you can't see it here. And it hit the 100-day. Both held the market. So I think the pros came out of their shorts there. I wouldn't be surprised to see them sellers at the 18-day average. However, with an oversold condition, they might elect to back off of that. We write about all this, and believe me, there's so much to write about with what's been going on that I think you want to get yourself looking at the kind of research that we can present to you. And on that research, so you'll know, we cover all the soft markets, the grain markets for you, the meat markets, and we give you ideas as to what the commercials are doing, what the end user is doing, what options traders, speculators, and the like are doing, and we put it all together for you, including the futures. So how do you get all this? Or pick the ones that you want those categories for a trial? you give us a call. By the way, if you have a trading account with us, this is included with what we're doing at this point. So I think you'll find it very interesting, especially in these volatile markets. All you need to do is give us a free call at 866-973-2077. If you go to our website, you'll see a carousel of free offers. Click on that, or click up here and it'll take you to that carousel in that area where you fill in a form. I'm Ira Epstein. Have a good day.